In November this year, India's central bank, that is Reserve Bank of India or RBI, told banks and non-banking financial companies or NBFCs to make higher provisions to ring-fence the risk that they may face from unsecured personal loans and credit card loans. The increase in credit risk weight for unsecured loans means that the banks have to reserve more capital for raising buffers to absorb the losses from unsecured loans. Justifying the RBI action, Chief Economic Advisor Anantha Nageshwaran last week said that unsecured personal loans were growing at the rate of 30% and that the RBI increased the risk weights so that banks and non-banking financial companies would moderate the unsecured personal loans. Brokerage firm Elara Securities, in an October 6 note, had said that unsecured loans formed 32% of the total loan portfolio. According to a Reuters report, RBI had in October urged lenders to tighten controls on tiny personal loans too. Just a month later, leading banks have urged their fintech partners to go slow on small lending, which are often used on lifestyle spending. The total value of loans below 10,000 rupees grew 37% in the financial year 2023, while loans of 10,000 to 50,000 rupees rose 48% according to CRIF data. It is most likely because of this sharp surge that RBI had to intervene.
The recent preemptive measures taken by the Reserve Bank in respect of banks and NBFCs were geared towards addressing potential risks and preserving the resilience of the financial sector. We do not wait for the house to catch fire and then act. Prudence at all times should be the guiding principle, should be the guiding philosophy, both for the regulators as well as the regulated entities.
So, is this the end of small retail loans?
I would not say that it's the end of the road for small retail loans, but definitely it will not be, the growth will not be as much as we have seen in the past 2 years. As you have noticed that this particular segment, which is not even 10,000, even much below, I understand that there have been loans given, it's 500 rupees. The college students are going for to the beer pub, to the pub for a bottle of beer. They are taking this kind of loans. It's a no question asked, no security, no collateral.
According to CRIF high mark data, delinquencies or missed payments for loans under 50,000 rupees were at 8.1% as of June 2023. This is well above the 1.4% bad loan ratio for all retail loans as of March 2023, according to the latest RBI data. According to experts, the rationale behind such a move from RBI is to do with the increased unsecured loans. There have been tendencies of stacking up several loans by the same individual.
That money has been used for various purposes, mostly used for consumerism, some form of consumerism, be it travel, be it purchase of white goods, be it marriages. So I think we are seeing a lot of PLs happening on preempted expenditure. And that expenditure is propelling demand, consumer demand in the country. However, what India can't afford or ill afford is that we are still on a per capita GDP basis, we're a poor country. So generally our individuals have much lesser buffer. So if they try and lever up too much on credit, which we are not too levered as an economy as yet. But if we keep levering more and more as an economy, the chances of our debts failing are higher. And what RBI is trying to do is trying to use tools that are within their reach to make sure that we are able to curtail some of these things.
According to RBI, India's net household financial savings was at a 50-year low of 5.1% of gross domestic product in FY23. So, there are still a large number of people who may need these small loans for survival and fulfill the urgent needs. According to experts, now they might have to rely on informal lenders with higher interest rates.
It's an evolving scenario. Who will it affect? It will affect the lenders, definitely. They had a great run, so they have to now be cautious because the ball is turning. Regulator is keeping a very close watch. Will it affect the borrowers and how would they manage it? As I said, if it's for genuine purpose and we are curbing the flow, then they will shift to informal segment, because for them money is they want the money, so they go to the informal money lenders. And if it's for the speculative purpose, then it's a win-win situation. That particular phenomenon should come to an end.
Small retail lending has been rapidly growing in India thanks to technology. Experts said that with the increased credit risk weight on unsecured loans, the retail lending portfolio will slow down. But it will bring down the delinquencies and speculative spending, like purchasing of white goods. But as the chances of securing a small loan without collateral is going to be narrow, there will be a section of people who will have to rely on informal lenders for their immediate needs.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.